Welcome to the Wisdom Whale podcast, where we dive deep into the vast ocean of money, wealth, and financial literacy. Join us as we embark on a journey of exploration, uncovering the secrets and wisdom that will help guide you towards financial success. In today's episode, we'll cover the role and importance of the stock market in capital formation, wealth creation, resource allocation, economic health, job creation, and its impact on other financial markets, while also highlighting the associated risks and the need for professional advice. The stock market, you've probably heard of it before. It's where all the buying and selling of stocks happens. You know, those things also known as shares or equity. It's a place where companies can raise money by selling ownership shares to investors, and where investors can trade those shares with each other. But the stock market is so much more than just a bustling marketplace. It plays a pretty big role in our economy. Let me break it down for you. First off, the stock market helps companies raise capital. When a company wants to finance its operations, do some research and development, or expand its business, it can sell shares through an initial public offering or subsequent stock offerings. By selling shares, they're able to raise funds from investors. This capital formation is a big deal because it supports investment, growth, and innovation in the economy. Basically, it helps companies get the money they need to do cool stuff. Now let's talk about wealth creation. The stock market gives individuals and institutional investors a chance to invest in publicly traded companies. When you buy shares, you're becoming a partial owner of that company. And that ownership means you can benefit if the company grows and becomes more profitable. How? Well, stock market investments can generate capital gains when the stock prices go up, and you might even receive dividends if the company is doing well. So it's not just about making money for the company, it's about making money for yourself too. It's a win-win situation. Efficient allocation of resources is another important aspect of the stock market. Basically, it helps investors figure out where to put their money. The stock market allows investors to allocate their funds to companies they think have potential for growth and strong performance. The market provides information on a company's financial performance, market conditions, and investor expectations, which helps investors decide where to invest their hard-earned cash. So, it's like a matchmaker between investors and companies. It helps make sure money goes to the companies that deserve it. Oh, and get this. The stock market can be a pretty good indicator of economic health. People often look to stock prices and market indices as a way to gauge how the economy is doing. When the stock market is doing well, it can signal confidence and optimism, and that can lead to more investment and economic activity. On the flip side, if stock prices start going down, people might start worrying about the economy. It's kind of like a thermometer for the financial world. But wait, there's more. A vibrant stock market can also contribute to job creation and economic growth. When companies are able to raise capital through the stock market, they can expand their operations, start new projects, and create jobs. So when the stock market is thriving, it can be good news for both job seekers and the economy as a whole. Plus, a healthy stock market can attract investment in innovative and emerging sectors, which helps drive economic development. So it's like a catalyst for growth and opportunity. Believe it or not, the stock market doesn't just stay in its own lane. It has spillover effects on other financial markets too. Changes in stock prices can actually influence how investors behave in bond markets, currency markets, and commodity markets. Stock market movements can even impact investor confidence, which in turn can affect consumer spending, business investment decisions, and lending activity in the banking sector. It's like a domino effect. One thing leads to another. All of this being said, it's important to know that the stock market isn't a lone ranger. It's influenced by a bunch of factors like economic conditions, corporate performance, geopolitical events, investor sentiment, and market regulations. And while it can be an exciting place to invest and make money, it's not without its risks. So if you're thinking of getting into the stock market, it's a good idea to consider your own risk tolerance and maybe even seek some professional advice. You don't want to jump into something without knowing what you're getting into. So there you have it, a rundown of the stock market and its role in our economy. It's not just a place where stocks are bought and sold. It's a driving force behind capital formation, investment, and economic growth. And remember, it's not all rainbows and sunshine. The stock market is influenced by a bunch of different things, and it's not without its risks. But with a little knowledge and some careful decision making, it can be a pretty exciting place to be. In today's episode, we discuss the significance of the stock market in terms of capital formation, wealth creation, economic health, job creation, and other financial markets, emphasizing the importance of seeking professional advice amidst its inherent risks. Thanks for listening. I'll see you guys at the next one, and don't forget to subscribe.